Good morning, Breakfast Club family. This is Mark Stevens for your host, Joseph Shute. Welcome to the Breakfast Club. Hope you had a great day yesterday. Hope you have a fantastic day today. Joe will not be with us today. He is working on the letters in the back office of Tools Rock. Still had a little more work to do. He's been up all night. I haven't talked with him this morning, but he left me a message, so I'm just delivering the message. And there's one letter that I'll talk about in a little bit when more people have chimed in. So we will talk about that, and we will talk about also the new lead program. Hopefully, those of you who have that interest chimed in. It's a free program with a referral option if you so choose. So it's a great way to build your list, a list that only you have, a list that of interested parties. Not only are they interested in opportunities, but they're also interested in talking to you about their opportunity probably as well. So I like that, because I'm always open to, what other people have and have to say. I use the term that, I keep my patent office open because I don't know, what I might find that can help the business that I'm already in, whether it be a lead program or whatever. So, I keep my patent office open. I don't feel like I know it all. I don't feel like I have it all. What I feel like doing is loving people and helping them out the best way I can. And the more that I know, the more that I can share and help people. Today, we're going to be talking about tea time. No, not the tea you drink. No, not the timeout that they call in sports. No, not the technical fouls, but tax time. It is tax time in this country. You have till April the 15th to file your taxes to be on time. Now, if it's two things that get people nervous, is taxes and lawyers. And I really don't have an affinity for either one. Lawyers, they're okay when I need them. But when I don't need them, I don't have a great affinity for them, if you know them like I know them. But anyway, we won't go down that rabbit hole today. But we will talk about the taxes. And yesterday, we talked about, I gave you a choice what we we're going to talk about. So today we're going to talk about taxes. And basically what I'm going to share with you is things that you can deduct in your business. The things that you have used and purchased and things of that nature in your Karatbars business. Because you often hear me say that I tell my clients, and I've told you on many occasions, that I ask people, and even accountants, what is the #1 tax shelter in America? And if that accountant doesn't tell me is having a home-based business, that accountant cannot be my accountant because that accountant will cost me a lot of money. The #1 tax shelter in America is not stocks and bonds. Why? Because that's paper. That's a loser. Sure, everybody said, well, Mark, the stock market is way up. It's in a record, proportion and everything like that. Yeah, but just wait a little bit. Because like I told you, it's falsely propped up. And I just pray that you're not in it when the fan is turned off. So anyhow, taxes. The only two things in life that are guaranteed is death and taxes. And the thing is that you have to know and understand what you're doing in business. And the main thing is simply this. The #1 rule in small business is simply this. Don't mess with IRS, Internal Ripoff Agency. Don't mess with them unless you know what you're doing. And they will come after you. They will trick you. They will do anything that they can to take your money. Matter of fact, as far as I'm concerned, they're worse than the insurance companies and the banks. Well, maybe not as bad as the banks, but as far as I'm concerned, they're bad. Now, I'm not giving anybody tax advice. I'll make that disclaimer, but I'll tell you what I'm doing, and then you can take it from there. It's very important that, see, the law says that you are allowed and you should do everything that you can to legally prepare your taxes and take the legal deductions that you're entitled to. And the key to that is simply this: documentation. Everything that you do, you want to document it. In the event that you get audited, and the chances are pretty low these days. First of all, they don't have enough employees because their budget has been cut. Yay! The other thing is, well, they're legal anyway, so everybody should be cut. Well, the agency anyway. I care about the people, but not the agency and its rules. So you need to understand the laws, and you should take every deduction that you're entitled to pay the least amount of taxes that you can. I've been doing it for years. I have made six-figure income and paid no taxes, if you know what you're doing. I'll share a story with you. Some of you might have heard it, some of you might not, and some of you might have forgotten it. Way back in the day, Mark Stevens was a young entrepreneur. And one day he got a letter from the Internal, at that time, Mark Stevens knew them as the Internal Revenue Service, a government agency, so to speak. And the Internal Ripoff Service called Mark Stevens in for an audit. Of course, Mark Stevens was shaking in his boots because he thought he did everything right, but he you know, when you get something in the mail from IRS, you shake in your boots unless you know something is coming. So Mark Stevens goes in there, and I'm gonna tell you about 2 times of Mark Stevens' experience with the Internal Ripoff Agency. Mark Stevens goes in there one time, and they say, well, your taxes were wrong, and you owe us $30,000. Of course, I sat in a chair frozen, and then they say, and in addition to that, Mark Stevens, you got 30 days to get us our money, or we're gonna take your house. And I really started sweating because I didn't really know what I was doing at that time. So on day 30, I walk into the IRS International Ripoff Service, and I have in my possession $3,100 bills. And I guess it's 30 or is it 300? Whatever it is. So I'm still upset. And I lay the money on the Internal Revenue, the revenue agent's desk, and the agent said, you need to count that. I said, no, I don't. You told me to bring you $30,000. Here it is, and I'm out of here. Bye. And I left. I don't know if that was a good thing to do, but I was young, but I left. I gave them their thieving money, and then I said, this can't happen again. So once they start on you, they never let up. See, that's the thing about it, at least back in the day. When they started on you, they never let up. So I said, you know what, Mark, you got to learn a few things. You got to learn about this agency. You got to know what they're all about. You got to learn your business. And I did. So the next time they called me in, it was for an audit. And we went through the audit, And at the end of the audit, they said, well, Mr. Stevens, we're finished and we owe you $22,000. And I had a big smile on my face, $22,000. But I was wondering, why do they owe me $22,000? And then I went to start studying. And you know, at that time, there was like about 144,000 pages of the IRS tax code. And like I said, Cecil Piper is one of the few people that I know that have gone through every page. Now, I've gone through the pages that pertain to what I'm interested in, and that's having a successful business from home, being a small business person. So I learned them, and I learned them, and I learned them. And now I know them like the back of my hand. So I pay little or no taxes in most years because I know how to use it to my advantage, enjoy it, and give them what they think they'll do. As far as I'm concerned, they'll do nothing. They have no right to take our money, period. And I'll tell them that to their face. But anyway, so when you learn that and you need to understand that, then you can do your business properly. So the key, as I said, is documentation. So the first thing we're going to start with, what are we in? What do we do? We are simply this. We are small business owners, and we happen to operate our business from home. Our home is our brick and mortar. We don't go out to an office anywhere because the office is in our home. In other words, if the administrative office for your business is from your home, that qualifies it as a home-based business, and it qualifies it for a number of tax deductions just like the big corporations get. That's why I say it's the #1 tax shelter in America, because you are able to convert your everyday personal expenses into business deductions just like a regular corporation does. So you have to learn that. You need to understand that. So if your office is from home, then what do you think corporations do when they have their offices? When they build offices or when they rent office space, what is that to them? It's a tax deduction. You have your office at home, whether it's in an apartment, whether it's in a trailer, whether it's in a house, whether it's in a mansion, it does not matter. If it's from home and you are up in the administrative office and you're running your business from home, it qualifies for certain deductions. So, well, but over the years, the Internal Rip-Off Service have made it tough for people to take home deductions because it was so convoluted. They've made it better now. It's easier to do now. And a lot of years, I didn't even bother to take the deduction because if you owned a home and you took the deduction and you got this equity building up in your home, when you sold that home, you had to bring all this stuff together and you had to pay the difference in the taxes and all that kind of crazy stuff. So I didn't want to do all of that, so I just said I won't take that deduction. But I found enough other deductions that I didn't even need it anyway. But here's how you do that. In other words, based on the amount of square footage in your home, okay, based on the amount of square footage in your home, and based on the amount of square footage that you use as your office and as your space for running your business, you can take that percentage deduction off of your rent, off of your mortgage, off of your utilities. Yes, indeed, you can do that. Give you an example. Let's say that you live in an apartment. And let's say you've got 5 rooms in that apartment and you've got 2 bedrooms. 2 bedrooms, living room, dining room, kitchen. And you decide to use one of those bedrooms for your office, to do the administration of your business from that office. And you put a desk in there and you put a typewriter, a computer in there, type whatever you use. The things that you use, your office equipment. Okay, you've got 5 rooms in that house. And let's say that that space that you use, okay, what is it? It's 1/5 of the space in your house, in your apartment. So that's 20%. And let's say, just for figuring purposes, your rent was $1,000 a month. Well, what is 20% of $1,000? $200. That means you have $200 that you can deduct. You have $200 that you can deduct, $200 a month. So that's $2,400 for the year that is tax deductible on Schedule C. Schedule C is the schedule that you use to report, the operating of your business. Your tax advisor will be able to tell you all of that. Hopefully, it's one that knows the small, home-based business tax law. If not, you need to get one, because if not, that accountant or the person that's doing your taxes is going to cost you a lot of money. So anyway, that's how you do the house. And the main thing is documentation. So now, whatever utilities, gas, electric, water, whatever that is, you take 20% of that. Insurance, if you pay insurance on that house or whatever, 20% of that. All of that is tax deductible on Schedule C. Okay? Now, what else do you have for your office? You have office supplies. You go to Office Depot, you go to, what's the other one? Staples, Office Max, any place where you buy supplies for your business. Remember what I said, documentation? Get a receipt for everything. And you have that receipt. All those office supplies are tax deductible because you're using them for your business. Even if you don't take the home deduction like I wasn't taking for a while, you can still deduct the business supplies that you buy. So you hang on to those receipts because the expenditures will be offset. Well, they will offset your business income. So remember what I said yesterday when we was talking about some things? Your income minus your expenses equals your net income. And that's what you want to look at to see how much money you're bringing into your business. The bottom line. Remember I talked to you about that sheet? Okay. So now, the other thing that you have is you have furniture. You got to have a desk. You got to have a chair. You got to have file cabinets, things of that nature. Well, guess what? When your office supplies are more than just pens and paper, you have another tax cutting opportunity. And, office furniture acquisitions provide a couple of choices. You can deduct either 100% of it, and that's what I like to do, deduct it all. Or you can, of the cost in the year that you purchase it, or you can deduct a portion of it, of the expense over 7 years, and that's known as depreciation. So certain things I may do all at one time, and some things I may do over the years. It depends on how my taxes look, because you can carry over deductions as well. And there's a way of working that if you know what you're doing. I mean, legally, I'm talking about legally, morally, and ethically. Remember that. Legal, moral, and ethical. That's how you want to do it. So office furniture. I think it's under Section 179, IRS Section 179, that you can do 100% of the office, equipment, computers, and all those things like that. So that's the way I prefer to do it, but you can depreciate it as well. But you can look that up. You can go to irs.gov and find all those things out about business. They have a business pamphlet. No, they have about 5 of them. I don't know them. I don't have them right in front of me or anything like that, but you can go on and find that. Now, so we've got what? We've got the house, we've got office supplies, and we've got furniture. Now, besides furniture, there's other equipment. Number 4, there's other equipment. What do I mean by other equipment? Under that Section 179, it provides another tax break in the area of business expenses. So what I'm talking about there is You know, like I said, typewriter, copier, computer, your cell phone. Let me see. I mean, all those things that you use for your business are tax deductible. Software and subscriptions. Subscriptions, what subscriptions? Subscriptions to business magazines and things that pertain to your business. Those magazines, they're tax deductible. And there's, you know, publications that you can get to tell you about your business, how to run it, and things that you can do to improve it and stuff like that. So use those things, and they are tax deductible. Remember what I've always said, that everything you want to do, you want to make it a tax deductible event? Okay. That's what you want to do, especially when it pertains to your business. So remember, by having a home-based business, it allows you to convert everyday personal expenses into business deductions. It depends on how you do it. And as I say, do it in a tax-deductible event method. And I'll share something with you in a minute, because I know a lot of y'all like to eat. But anyway, now the next thing that you do have is simply this. Even though you have your business from home, do any of you go out and talk to people about your Karatbars business? I'm quite sure you do. And how do you get there? You don't just walk. You use transportation. It could be your own transportation. It could be the local train. It could be a bus. It could be a taxi cab. It could be a rental car or whatever, but guess what? All of it is tax deductible, depending upon the way that you use it. Now, let's talk about probably the main way that you get there, and that's because you have an automobile. Well, guess what? Every mile that you use for business, this year, the internal rip-off service will allow you 57.5 cents a mile for every mile that you use in your business as a tax deduction. Now, if you were leasing a car, the lease payments could be tax deductible. If you were, there's another method you could use where you can use depreciation of your automobile that you own and maintenance and all like that. To me, I've always found the best way for me, at least for me, was the mileage, because I put a lot of miles on a car when I was doing that. And I remember one year I put like 30,000 miles on my car, and I had a big, nice deduction. This is why I can easily tell a person, I can show you how to reduce your taxes by as much as 50% and give yourself an immediate pay raise. I can show you how to do that. And, you know, when I was consulting with small businesses and people, they were paying me $300 an hour to teach them how to do that, among other things in business. It was just so happens that I'm versed really in the tax aspect of it as well. So that makes me more valuable. And where they were paying a lawyer $600 an hour, I said, well, you know, only $300 an hour. You know, I'm not trying to rip you off. But I gave them more than $300 an hour's worth. Always, you always hear Joe Shoup says what? Do what's right by the customer. To me, what that means is give my customer more than what they're paying for. And do right by everyone that's around you. How do I do right by that? I share what I have with everyone that are around me. Like you, my family, that I love. That's why I share these things with you. And I'm not charging you $300 an hour. So the mileage, remember that, 50 cents and a half mile. So for example, if you put 20,000 miles on your car, multiply 57.5 cents a mile times 20,000, that's a nice tax reduction to go on Schedule C. Nice, I'm telling you. That's why I don't care what I pay for a car. And when I was doing that, I got the best car. I drove the Mercedes-Benz, the best one I could buy, because I know that most of it was going to be tax deductible based on the way that I was using it. Doesn't have to be a Mercedes-Benz. It could be a Volkswagen. You know, it could be you know, any kind of car that you like. Doesn't matter. It's just that I just happen to like Mercedes. You know, it could be a GLP, get out and push. Be one of them cars. So, but if you can put gas in that type of car, you can you know you use it, you can deduct the mileage. So okay, let me move on here. So take advantage of that, because any way that you can use to reduce the amount of taxes that you have to pay, then you should do that. Now, the other thing that you can do is, like I said, a lot of you like to eat. Now, when I go out and eat, I try my very best not to go alone. Or if I'm by myself and I meet somebody, I may walk up to them and, you know, introduce myself and whatever, and talk about my business and buy their lunch. And guess what? Whatever I pay for that lunch for the both of us, 50% of it is tax deductible. So I can make the government, I can make the Internal Ripoff Agency supplement my meals. Remember, you convert everyday expenses. You spend money every day for food or things like that, and to business deductions. Buy somebody lunch, tell them about your business, buy them dinner, buy them breakfast, tell them about your business, whatever you pay for that meal, $20, $30, $40, $50, $100, whatever it is, and I've done it all, 50% of it is tax deductible. Now, if you happen to have done the business in your office, which is your home, and you provided a meal for 5, 10 people and showed them Karatbars presentation, 100% of everything you spent for meals and everything on that meeting is tax deductible. So take your choice, 100%, 50%. I did them both. Isn't that great? Isn't that great? Those are the things. That's why you want to have a business working from home. That's another reason. That's one of the best reasons. Because the other thing too, let's say if you did this for a good while and then come tax time and you have a job, and in your business you made X number of dollars, but your expenses were more than what you made in the business. The difference is tax deductible out for your W-2 income on Schedule 1040. See, that loss will offset the other income, thus reducing your taxes. You put more money in your pocket and having fun. Oh, it's so much fun. It's so much fun. That's why I say that when people say knowledge is power, and I say I beg to differ with you, I say the use of knowledge is power. If you know how to use these things that I'm telling you about now, you don't have any power. But if you know how to use it, you've got power, and you can have fun using that power. But the key is documentation, make it legal, moral, and ethical. You put those 3 things in the ingredients, you stir it up, you got it going on. And that's what you want to do. And like I said, also insurance premiums. If you have to buy certain insurance for your business, if you have to insure certain things like your car and things like that, a percentage of that premium that you pay to the insurance company is tax deductible. It's a business expense. And guess what? You also got retirement contributions. What does Karatbars have that is so good? They have an SDIRA program. If you get in that program as a Karatbars affiliate and you put X number of dollars in there for your retirement, that is tax deductible on your 1040. I mean, on your Schedule C, and transfer it to your 1040. You got so many benefits here. And that's your retirement. And it is tax deductible. IRA. But the thing is, the type that most people have, remember our presentation, they don't have the right kind because they got somebody else directing their retirement money, and they're going to lose it. They have lost it, going to lose it, and will continue to lose it. Why? Because it's in paper. Ours is in real money. 999.9% Kinabar gold bullion. That's what you want to have. At least that's what I want to have. So then guess what? You use a phone. I mentioned your cell phone. Your cell phone, the phone in your home that's in your office that you use for your business, both of them, tax deductible, 100%. 100%. If your cell phone bill is $150, $200 a month, yes, I've had them like that. Tax deductible. Tax deductible. And let me close out with this one. I've given you about 12. There's more than that, but I've given you one of the main ones. Let's say that those of you that have children or grandchildren, and they're at least 6 years of age and up to 17, like, and guess what? You can hire them in your business, pay them, and whatever you pay them is non-taxable to them and tax deductible to you. You hear what I said? You can pay them. You can just do an employment contract with them. You pay them reasonable money, you know, find out what people that they're doing, what they make out here, you pay them that money, and it's tax deductible to you and non-taxable to them. What a way to build up some college money for them. Well, I ain't that excited about college, but that's another story for another day, because it's a big rabbit hole, and we'll talk about that one day too. So it's 11:31, 1 minute past the bottom of the hour. I pray that I've given you some things to think about for those of you that haven't filed your taxes, and those of you that have. As a matter of fact, you can go back 3 years and redo your taxes if you've had this business for that period of time and possibly get money back. The law allows you to go back 3 years and refile your taxes. That's another story for another day, but it's a good story. And Cecil Piper couldn't make it today, but he and I could really talk about that and everything, and maybe we'll do that another time. But like I said, I pray that I've given you some good things today. What I'll do is, let me look at the chat box, and I'll address the some tax questions, so to speak. Okay, let's see. Okay, I don't see any questions in there. So evidently, some of you know a little something, something, and that's good. Hopefully you can use the information that you've gotten this morning. Gloria, I see your comment in there, and Joe's been working on that. What I would suggest is that you give him a call or send him an email and let him break that down to you, what he's done. And then he'll give you all the ramifications of that. So, with that being said, peace and blessings to you. I pray that you have a fantastic day, that you share your opportunity with someone so that they can change their life, so they can change the economy in their home, so they can change their career, so they can be an instrument of change in their community, and most of all, in their city, county, state, and most of all, in this world. Because like I said, it is my hope and my dream that we all, one by one, can be instrumental in somebody in this world to change, that they can have financial freedom, time freedom, little or no stress, and they can enjoy the life that the Creator intended for them to have. With that being said, I love you much. We'll continue to work hard for you. You know, let's go to work. Let's use our systems. Let's use our communication. Let's become good communicators. Let's become great connectors. Let's use what we've learned, and let's give it a year, and let's make the next year the best year in our lives and in somebody else's lives. Okay? So with that being said, this is Mark Stevens for our host, Joe Shoup, saying peace and blessings, family. Make it a great day. We will see you back here tomorrow, the first day of the week, on The Breakfast Club. Peace and blessings, everyone.